In this week's EV news, Vertu Motors issue a profit warning blaming the ZE mandate. EV drivers are more likely to crash their cars, but are less likely to get hurt. All electric cars now make up 1/5 of the UK market. And Be.EV launched their first ultra-rapid charging site funded by Natwest. Welcome back to another EV news. If you're here because you subscribed when notifications turned on after watching the last one, then thank you so much for your continued support. For everyone else, I'd be very grateful if you could click the subscribe button. It helps the channel grow at no cost to you whatsoever and means you won't miss out on the next video. And for everyone, if you could click the like button to convince the algorithm this video is worth watching, I'd be very grateful indeed. If you have any news articles of note that you'd like to see covered in future videos like this, go to dothisnext.co.uk and fill out the details. I'll do my best to feature them going forward. Now then, let's get into the news, shall we? Vertu Motors, a leading UK car dealer group, has issued a profit warning, citing the impact of the ZEV mandate. As we know, the mandate requires 28% of all new car sales in 2025 to be zero emissions, rising to 80% by 2030 with penalties for non-compliance. The company cites increased discounting, lower consumer demand and rising labour costs as their key challenges. Vertu's expected pre-tax profits have been revised downward and cost-cutting measures are being implemented at the firm. Could it have anything to do with the fact that main dealers on the whole are absolutely terrible and people absolutely detest using them? I don't know about you, but any experience I've had with main dealers in the past 10 years has just been awful, whether that be sales or service. They just are crap. And that's possibly got more to do with Vertu's poor performance than the legislation. However, the business said it has delivered like-for-like retail volumes and battery electric sales that are ahead of the market, while record fleet sales across the UK market has adversely impacted their gross margin. So that could be one big side effect of pushing a lot of people towards things like salary sacrifice schemes. Less and less actual retail sales, and the fleet sales that drive these types of scheme are going to have much lower profit margin in them for the supplying dealers, because these lease companies, they buy in bulk, they pay an agreed price per unit, and that is nowhere near with the same amount of margin in it as one-off cars you sell to someone on a retail basis. And likely that could be one of the bigger impacting factors here than just, oh, there isn't enough demand. As we talked about before, saying that no private buyers want an EV, it's not strictly true, is it? Because there's an awful lot of people now that rather than buying a retail car privately, brand new, they're getting them through like lease schemes, salary sacrifice and that kind of stuff. And therefore, the demand is still there. Those cars still get sold. They just get sold for less money to lease companies. I also think that the current environment, what with the impending rise in employers' national insurance and all that kind of stuff, which was mentioned in this article, way down the list from the doom and gloom about the ZEV mandate, is much more likely to actually cause these challenging trading conditions and be more likely to be the cause of their issues in terms of profit. But it'll be interesting to see how things pan out for them. They are a very big dealer group. They have a lot of garages all over the country, and therefore, there's an awful lot of people employed by them, and I wouldn't like to see a lot of people out of work. Hopefully, they manage to turn things around, and hopefully things start looking up for them. Next up, then. Insurance data shows that EV drivers are 56% more likely to file accident claims compared to combustion car drivers. 1 in 12 EV owners made a claim last year compared to 1 in 20 petrol vehicles, according to Howden, who are an insurance broker. Despite the higher accident rate, EVs account for fewer bodily injury claims though, likely due to their weight and design, which means they have more safety features. Repair costs for EVs are higher, averaging £3,784 per incident, leading to increased insurance premiums. Carl Schuker, the chief executive of Howden UK and Ireland, believes that electric cars are involved in more accidents because they are performance vehicles that take a while to get used to driving. He explained, "They all perform like the old Golf GTI. There's a lot more power than other vehicles, which means more day-to-day impacts and higher claims. And the frequency of claims obviously is really important for setting premiums. 59% of our clients have only owned a new electric car for 1 year or less. More people are experimenting with electric vehicles, and the first 3 to 4 months are the riskiest as people get used to the car, which might explain the higher claim frequency. Now, I'm not going to argue with Howden's data here. It is what it is. That's what they're seeing among their client base. But I do think we should maybe take it with a little pinch of salt. So Howden provides specialist insurance products for a variety of different people in different situations. I was in contact with them myself recently about a motor trade insurance policy, for example, which, funnily enough, they couldn't help me with because the percentage of electric stock that my business holds is so high, i.e. close to 100% of the cars I have in stock are electric, and they weren't able to write me a policy. They're not, though, a company that the average Joe is going to for an insurance policy. Most people are just going on a comparison site, putting in the details and taking the cheapest policy they can find. They're not going to a specialised broker that specialises in people with very specific needs. So these statistics from Howden are interesting, but I don't think they represent the entire insurance industry by any stretch of the imagination. I think it's a fairly particular subset of people who have specialist insurance for a given reason. So obviously there's like the motor trade element and all that, but I imagine there'll also be, fleet policies for high net worth individuals that have loads and loads and loads of cars. And is that really representative? Is that the kind of market that you can draw conclusions from and say things like EV drivers are more likely to crash? I'm not sure that it is. It's interesting data, and it was definitely worth featuring here, but does it represent the whole of the UK or the whole of the market? I don't think so. But let me know what you think in the comments. Next up, well, it's going to be some sales figures news, obviously, isn't it? Electric vehicles now make up 21.3% of UK car sales, up from under 15% this time last year. Despite this growth, sales remain slightly below that all-elusive 22% target that we had for the whole of 2024. Overall, new car registrations dropped 2.5% in January, with Tesla's sales down 7%, while BMW, Volkswagen and Mercedes actually saw increases. Of course, we are talking about the SMMT figures again, as January's results are now available. I'm seeing an awful lot of people take this information and the fact that EV registrations rose in January, and they're saying that it proves that pre-registration wasn't as big an influence in the market as they thought. What we expected to happen was manufacturers would register a load of pre-reg in December to game the ZEV mandate figures. And because sales have remained strong in January, that means that pre-registration wasn't this big game. And this because the sales haven't completely crashed, that means that isn't going on. Well, I'm not 100% sure that that's the case, actually. Looking at some of the cars that are for sale out there, the cheap Dacia Springs I was talking about in last week's video, they were all registered on the 31st of January. So some manufacturers were clearly incentivising January registrations for one reason or another. Therefore, I think drawing those kind of conclusions from this data that actually, the market's perfectly healthy and pre-reg isn't the reason things are going up, not necessarily the case, and I would urge you to look a little bit closer before jumping to conclusions. Let's see what future months bring us. 1 month doesn't tell us a full story after all, and I'm sure we'll have a chance to take a look at the figures as the year progresses. And finally, Be.EV, a major UK EV charging network, has launched its first Natwest-backed charging hub in Manchester, marking a significant step in expanding EV infrastructure. The hub is part of Be.EV's broader initiative to accelerate the rollout of ultra-rapid EV charging stations across the UK, addressing one of the main barriers, you could say, to EV adoption, and that would be convenient and reliable charging access. The new hub features ultra-rapid chargers capable of delivering 150 kilowatts, allowing EVs to charge up to 80% in as little as 30 minutes, obviously depending on the make and model. This initiative is aimed at reducing congestion at public chargers by making more of them available, improving accessibility and encouraging drivers to switch to EVs. NatWest Group's involvement in the project demonstrates increasing financial sector investment in green infrastructure, supporting the UK's transition to cleaner transport. As part of its sustainability goals, NatWest has committed to financing businesses and projects that drive net zero emissions, including supporting EV charging network expansion. The Manchester hub is the first of many planned charging sites like this, as Be.EV seeks to establish a nationwide charging network, catering to both urban and rural drivers. The company emphasises the importance of reliable, high-speed charging to combat range anxiety and ensure that EV drivers, especially those without access to home charging, have sufficient infrastructure. I love featuring stories about new infrastructure in these videos. We've talked an awful lot about sales figures recently, but not so much about new charging sites. And this one by Be.EV in Manchester does look really, really good. I think the more ultra rapid charging hubs like this that we're going to see, the better the experience is going to be for everyone. You get to the point where long distance EV travel isn't really a concern anymore. If there's enough ultra rapid chargers in strategic locations, places you'll want to stop anyway, then it's just not a barrier anymore. And I think we're rapidly moving towards that. But that is it for this week's EV news. I'd love to hear your opinion on any or all of these stories in the comments as always. Please make sure you subscribe with notifications turned on if you haven't already so that you don't miss out on the next one. Thank you very much for watching. I'll see you next time.